It's great to have your company for the weekly this Friday, the 4th of June. I'm Jessica Amir, a senior market analyst with Bell Direct. Well, the Australian share market, it's having a phenomenal run, charging toward the end of the 2021 financial year. This week, the ASX 200 hit not just one, but three historical highs, with the market up 1.1% Monday to Thursday, closing at a history making 7,260 points. This was largely thanks to better than expected economic news and strong rallies in the price of oil and iron ore. Now, this all helped the market track 10% up this year and 22% higher year on year. But did you know over the last 4 weeks, the market's hit 5 new record highs? Before that, we were regaining lost territory for almost 15 months. What's key is not only has the market completely recovered from COVID-19, but the ASX 200 is now acting as a barometer for economic health. What do we mean by that? Well, if you look at the 5 times the market hit those new record highs over the last few weeks, each rally was after stronger than forecast economic news was released. But let's look at where money flowed this week. Firstly, we can see oil stocks dominating the leaderboard. Worley, WOR, Santos, STO, Origin, ORG, Oil Search, Woodside and Beach Energy were some of the best performers. Why? Well, the oil price, which is a proxy for economic growth, rose to an over 2-year high, $68.77 US a barrel, because COVID cases in the world's biggest economy, the US, continued to fall. Plus, half of the US population have received their first COVID vaccination. The second major market driver, better than expected economic news, specifically Australian GDP. Well, that grew 1.8% in the first quarter of this year, beating expectations. Plus, the RBA announced full-year economic growth should grow to 4.75%. And the RBA also reckons unemployment will fall to 5%. So economic activity linked stocks like Reece, REH and Domino's Pizza Enterprises, DMP, also claimed top performing spots this week in the ASX 200. Shares in the bathroom kitchen business Reece are now trading 50% up year to date, and the cheesy pizza giant Domino's Pizza is up 33% year to date. Now, the third driver of markets of late, the commodity price rush, specifically gold, iron ore and lithium. Now, if you reflect on the best performers year to date, you can always find some interesting stories and get some stock ideas too. You may not have heard of Codan, CDA. Codan is the best ASX 200 performer this year. Its shares are up 65%. Codan recently made it into the ASX 200 index. It's a metal detection and underground mining tech business. And Codan recently launched a new gold detector at a time when the gold price is gaining momentum and scaled to a new 5-month high, $1,911 US an ounce. Now, even though Codan has had a massive share price run, Macquarie backs the stock as a buy, expecting new products and new revenue streams from potential acquisitions. Now, looking at Codan's chart, the daily, weekly and monthly technical indicators suggest CDA could run higher after its shares consolidated from late May. So who is following Codan as the top ASX 200 performers so far this year? Well, Virgin Money, VUK, is the second strongest performer, up 63%. Pilbara Minerals, PLS, is the third best, up 50% this calendar year. Now, what to watch next week? 3 key elements, I guess. Firstly, at the weekend, a key jobs report will be released in the US, Friday US time, expected to show the US economy added 671,000 jobs in May. Now, if the number is better or weaker, it's likely to sway equity markets, as there's been a lot of anticipation about this report. Secondly, and locally, 2 economic news items could move our needle next week. That's the ASX 200. Business confidence is out for May. The question will be is if levels can rise above the 7-year high set in April. And consumer confidence is out for June. The focus will be if the Victorian lockdown will drag confidence levels from the current 11-year high. Thirdly, There's 3 full trading weeks left till the end of 30 June, so selling pressure could mount on some of those worst performers because people are looking to write off losses against gains to minimise their tax. Now, here's a list of some of the worst performers in the ASX 200 year on year. It's worth noting markets usually see tax selling mount in some of the worst performers from now to mid-June. However, there's some really interesting stories here. Look, although A2 Milk, A2M, is the worst performer we can see, its shares have bounced off their almost 4-year low because China is now allowing families to have 3 children instead of just 2, which could favour A2 exports to that market. Now, the final takeaway here, most of the biggest losers this financial year are not big caps. So this means the Aussie market rally could march on. And that's the weekly. If you've got any questions, you can leave them in the comments section on YouTube. From all of us at Bell Direct, have a happy and safe weekend. I'm Jessica Amir. Bye for now.